Hello and welcome to Market Finance's webinar with guest speaker Bobby Lane.
Thanks, Rachel. Hi, everyone. Thanks for coming. It's 4 o'clock on a Wednesday, I think, which I've kind of forgotten what day it is and where we're at, which I think is the same thing most people are saying to me at the moment. But what I wanted to focus on today was looking at some of the key things businesses should be thinking about, and small businesses in particular should be thinking about at this current time, what's available, what they should be doing, and some sort of tips and things that maybe you hadn't thought of that you should now be looking at for your business. So when I've been talking to my clients over the last few weeks, in particular, we've been kind of splitting the task of running the business and managing the business down into two sort of distinct areas. One is looking at the income, and the other side is obviously looking at the costs. I've been trying to keep it very, very simple and thinking in very, very simple terms about how they can run their business. So at this time, we've got a situation where a lot of businesses that I've been speaking to and I've spoken to this morning, where their income has just dried up completely, absolutely no income whatsoever, and they're just trying to work out what to do with the business. There's some where they're trickling through. There's some clients that have online businesses where there's a few sales going through, but they're struggling a bit with what to do with the rest of the business. So I wanted to break it down today into two distinct areas, really. The first is what to do about the income that's drying up and what's available for the government and some things to think about, and then also the costs and what you should be thinking about there. So looking at income, first of all, the government have moved very quickly over the last few weeks, and it changes daily, really. So we're getting our 5 o'clock briefings, and we're getting everything updated on the website on a regular basis. And gov.uk is a really, really good resource, which is updated daily for all the latest policies and all the latest schemes that are available to help your businesses. But I just wanted to give sort of a top line on a few of them. You've probably heard of some of them. You probably know some of them. If you've got any questions as I'm going through, please, in the question box, just ask a question and I'll try and answer them at the end. But what can we do at the moment with no income? What have the government actually done? So there's 5 or 6 key areas that they focused on. The first one, which I've been asked the most questions about recently, is the job retention scheme. And that is where you are able to furlough members of staff and put them on furlough so they can't work for you. And the government are basically paying for 80% of the salary up to £2,500. That plus employers' national insurance and the minimum employment allowance. So you're going to get 80% of the salary back. It's going to be backdated to the 1st of March 2020 for companies that had a PAYE scheme in place on the 28th of February. So you had to have had your PAYE scheme in place, and it's for employees that were there from the 1st of March onwards. Before the 1st of March. To work out their salaries, you can look at the same month in the previous year, or if they're on salaries that change regularly, you can look at the average over the last 12 months between over 2019-20. One thing to remember, though, is this grant is currently going to be taxed as income and will be subject to corporation tax. So I've been asked that a few times. It's going to go onto your tax return, going through your company accounts as income, and will be subject to corporation tax. Sick pay was another one that the government brought in to help businesses with, and that is if you've got staff off sick, the government's going to cover 2 weeks of the SSP, and you'll be able to claim that back as well. The other area, which has been really, really interesting, is for the hospitality, leisure and retail sector, where they've been offering grants to help those businesses that have genuinely had to close for all the reasons that we're well aware of. And the grants for those businesses in retail, hospitality and leisure are based on the rateable value of the premises. So if you are in retail, hospitality and leisure, and you are not paying any rates because you're on small business rate relief, you'll be able to get a grant of £10,000. If you're up to £15,000, and you'll be able to get £10,000. And then from £15,000 to £51,000 rateable value, you'll be able to get a grant of £25,000. Now, you don't have to do anything about this, because the local authorities will be contacting you if you're eligible for it. They know what you're paying rates-wise, and they'll be contacting you if you're eligible, and you'll be getting that grant over the coming months. Don't know exactly when, but hopefully that should start coming through very, very soon. They've also introduced rates holidays as well for the business, which I'll come on to a bit later under costs. The other key sort of cornerstone area where the government are looking to help is the introduction of the coronavirus business interruption loan scheme. Now, this is a rebranded version of the old Enterprise Finance Guarantee Scheme, which is where the government were providing a guarantee. Now, formerly under the old scheme, it was a 75% guarantee. Now the government are providing an 80% guarantee for businesses that can raise money through this scheme. Now, I've been working with a number of businesses today that have been trying to access the scheme, and you have to prove to the lender that you had a viable and sustainable business that was profitable before this current crisis, and that if they help you through this area, through this time that we're going through, you will have a sustainable business on the other side and as we come out of it. So the onus is on the business to show that they had a profitable business and it's sustainable, and you have to go through the normal lending criteria of the bank and their credit committees to get it approved. Now, one thing to bear in mind is that this is a loan agreement and it has to be repaid. And there has been a lot of conversation in the press over the last few weeks, in particular about the personal guarantee situation. Some of the lenders I know are not asking for personal guarantees up to the £250,000 limit. Over that, they're looking for personal guarantees. So if you do take this loan, remember you're potentially going to have to give a personal guarantee. It has to be paid back. And there's also a very popular misconception amongst business owners that the loan is, and the guarantee is only for 20%. It's not. The borrower remains liable for 100% of that loan. So if you are going down the route of looking at the interruption loan scheme, make sure you go into it with your eyes open. You know whether you're giving a personal guarantee. And if you are giving that personal guarantee, you can make sure that you know what you're entering into on the other side, because it has to be paid back. And what we don't want to see is, in the fullness of time when we exit the crisis, businesses that have taken money and their businesses fall over have not only lost their business, but potentially lose their personal assets as well. So be very careful on that loan scheme and understand the small print, the personal guarantees and what you're entering into. On other areas, we've seen that the government have brought in for the self-employed a similar sort of limit to the job retention scheme. One thing I did want to add to the job retention scheme earlier is that we've recently heard that sole directors and proprietors and shareholders of businesses can now apply for the scheme as well. I've been asked a lot of questions recently by people saying, I take a minimum salary and top up my income with dividends. Am I able to access the scheme? You are, but it's only up to what you've taken under PAYE, so dividends aren't included. So for those people that might be sole director and shareholders in their business, you can access the scheme, but up to the limit of what's on PAYE. So as I said, for self-employment, the government have also brought in a scheme which is allowing you to claim 80% of your profits, up to a limit of 50,000, but a maximum of 2,500 per month. So that's some of the government schemes and some of the grants and areas where the government have helped. What other things should you be thinking about on the income side? Approach your banks. The banks are being as helpful as possible, as helpful as they can be at the moment. And I've just helped a client this morning who has a couple of loans with the bank, and the bank's just agreed a 6-month capital repayment holiday and interest holiday as well for them for the next 6 months. So if they're looking at their cash flow, they now don't have to make the capital repayments on their loans. So it's worth approaching your banks to look at interest holidays, capital repayment holidays, and see what the bank can do to help you on those sorts of areas. In terms of customers, hopefully some of you will still have customers at the moment. I know there are some that don't and some that do, but if you have got customers and you're still trading, speak to some of your customers that owe you money and clients and see if you can bring forward some and accelerate some of the payments. It sounds obvious, but go through your debtors ledger, have a look who owes you money and see if you can accelerate those payments. Some of the larger companies are working really, really hard to work with smaller suppliers and smaller businesses to support them through this time and seeing if they can help accelerate payments, if there's things they've contracted for, help make deposit payments up front. So it's worth having a conversation, communicating with your customers and seeing what you can do and what you can negotiate with them. Another area which is quite interesting before I get onto costs is insurance. And probably something most people never thought they'd ever hear in a sentence, that insurance is interesting. But there's a number of areas at the moment where I've been talking to clients that they should be aware of and things that maybe you hadn't thought of. One in particular is if a lot of businesses have sent their team to work from home or are in fact working from home at the moment, you need to make sure if you've sent them home with equipment, computers, printers, whatever it may be to continue working, make sure that if the equipment is in their homes, that A, they're covered under your policy if anything happens to it, or also they're covered under their own policy. Also think about your cyber insurance policies, because what we're seeing at the moment is people working from home, and some of the businesses have in a rush set up home working and haven't thought about IT security and those sorts of areas. So make sure you've got the right procedures in place, the right IT infrastructure in place, and that your cyber insurance policy will cover anything as long as your workers know how to abide by it. The other thing to think about insurance-wise is if you are if you've now closed your office, your premises, your retail premises, whatever it may be, have you notified the insurer that you've done that? You may not need to in every circumstance, but some insurers will need to know that you're no longer occupying the premises and that you're working from home. Chances are they'll accept that and recognise that anyway, because everyone's been asked to work from home. But you might need to just notify the insurer that that's what you're doing. And also, I've had a few questions from people about business interruption insurance and can they claim on their business interruption policy. Unfortunately, most business interruption policies don't cover pandemics, so it's unlikely. If you have a notifiable disease clause in your insurance policy, it may cover it, but it's quite rare, and there's not many businesses out there that are able to be covered for it. But it's worth having a read of your business interruption policy just to see if it does cover this business interruption period. So moving on to some of the costs. So if you are now looking at your costs and how to cut them and control them, what else can we do? What have the government introduced, and what are they doing to help those businesses at the moment? There's a few things that they've done that you may or may not be aware of. At the moment, you can defer your VAT payment. So if you had a payment that was due between the 20th of March, between the 20th of March and the 30th of June, you're able to defer that payment. Now, what you need to remember is that is a deferral, and it's not a grant, and it's not cancelling your policy, your VAT liability. It's deferring it. So you still have to pay for it. So many would say it's kicking the can down the road. If you have the cash to pay it, it may be worth doing it because you're only going to create a bigger problem for yourself in the future. But if you don't, you can defer your VAT payment, but it has to be paid by the 31st of March, so the end of the tax year. So remember, you can defer it. If you've got a big VAT bill, you don't have to pay it, but you will have to pay it in the future. The other thing the government have done is put more resource between the time to pay scheme. So if you are having issues, cash flow issues, and you can't meet your PAYE, VAT liabilities, corporation tax liabilities, there's a time to pay helpline, and the phone number is 0800 0159 559. Again, that's 0800 0159 559. And you can get onto HMRC, explain to them what's happening, talk them through your situation, and they will hopefully agree a time to pay arrangement with you to give you time to pay your liabilities. As I said before, on rates, there's grants that you could potentially get if you're in leisure, hospitality and retail, but they've also introduced rates holidays for larger businesses in those sectors as well. So if you are running a large restaurant, an area in hospitality, an event space, there are going to be rates holidays for those businesses. And the government recently extended that as well to include estate agents, letting agents and bingo halls as well. So at the moment, the 2021 rates bills for those businesses is going to be extinguished. So that will help on the cost side. And for those that are self-employed, there is also a self-assessment delay as well. So if you are paying tax on dividends, on income, or you're self-employed, the payment that you have to make in July, the payment in account that you make on the 31st of July, is now allowed. You can now defer that to the 31st of January. Again, comes with a health warning. It's deferred and not cancelled. So remember, if you're doing your cash flow planning, you're still going to have to pay it at some point. So don't forget that some of these measures are just moving the cash flow requirement further down to give you time to recover and hopefully come out of the crisis and build your cash flow back up. Other areas that I've worked with clients over the last few weeks that have been incredibly successful have been on rent. So we've worked with some clients and spoken to their landlords, for example, where we've tried to come up with a creative solution on how to deal with paying the rent. And in one instance, obviously we had a rent deposit in place with a landlord. And we negotiated and spoke to that landlord and said to them, look, we'd like to pay the rent. We can't afford to pay it at the moment. You're holding our rent deposit at the moment. Please use 3 months of that rent deposit to cover this quarter's rent. And then in 3 months' time, hopefully we come out the other end, we'll start building up that rent deposit again. So the landlord didn't lose out because they still got their money and they had their money and they could use part of the rent deposit. And the client didn't have to then pay for the rent for this quarter. So from a cash flow perspective, it really helped the business at this moment. So again, don't hide from the landlord. Just if you're not paying the bill and you can't afford to pay the bill, have a conversation with them. Like the banks, speak to the landlords. No one likes a surprise. And if you can have a conversation with your landlord, there are chances that they will help in some way, shape or form. We have seen the introduction of a policy where businesses can't be evicted if they don't pay the rent, but that means you're not getting excused from the rent. It just means you can't get evicted, but you're still liable for the rent under your contract. So speak to the landlord, see what you can do, and try and be creative about ways of trying to ease the cash flow of paying those rent bills. Also have a look at your utilities. There are a number of the utility providers are now providing links which you can literally put your utilities on hold instantly by informing them the date that you had to vacate the premises and you're not there. So some of them are allowing you to cancel online very quickly. Sometimes you've got to hold on and make a call. But it's worth going through your utilities and trying to pause them and tell them that the business is vacant for the time being. And again, on your costs, look at what you've got to do is look at your latest management accounts, look at your latest figures for the business, the P&L, the balance sheet, have a look at every cost that you've got within your business and see if there's any creative way of managing it. We've talked about some of the biggest ones so far, which is your staff costs, which you're able to furlough staff if possible, if that works. We've seen clients negotiating reduced salaries with some of their key staff. People asking if they can defer commissions. So think of big costs. The rent, you can talk to your landlord and see how you can defer that. But look at all the other costs as well. Your marketing expenditure, for example, if you have a number of different marketing activities, such as PR, social media, pay-per-click, SEO, it might be that if no one is actually physically coming in to see you at the moment, you might want to focus on online areas. So it might be that you reduce other areas of spend, and reduce down the SEO type work, but still keep it going, because if you can still generate sales from that, it's worth looking at. And I think also it's worth being very creative around pivoting your business and changing how you're supplying and providing the services. Now, I've seen a number of restaurants recently that are now set up for purely takeaway or deliveries, and they're still delivering food and doing takeaways. And they have as well set up new ways of taking money. So I put out on social media yesterday that I've been working with a number of businesses who have now set up their own virtual terminals. So if you are a retailer that only had a fixed credit card machine and a fixed terminal, you can now for no cost set up an online terminal free of charge and do a pay-as-you-go deal where you just pay if you use the terminal and you use the services. So you're able then to take credit card payments if you haven't before, or you're able to take payments from a non-fixed terminal. So if you're working now from home, or if you're working from home and still providing services, you could for the first time be able to take credit cards from your customers as well. So think about the service delivery or delivering your product and how you're going to do that, and think if there's a clever way of still providing that service. And there are some amazing opportunities. I was talking to some of the market finance team before about some of the opportunities that are out there at the moment. And there's some new software packages. There's apps that are allowing you to link up with some of your other existing software platforms. And there's some great opportunities for you to now expand out your offering and think about how you can take that forward into the market. I think there's a couple of things I'd like to just sort of reiterate and get across. And one of them is that I think there will be a life after COVID. There will be businesses after this crisis. And people have to I know it's not easy, but you have to try and stay calm and make decisions that are based on information, sound thinking, rather than a knee-jerk reaction. Because if you are making decisions now very quickly without thinking through the consequences or thinking through what will happen on the other side, you might be leaving yourself very exposed in the future when the businesses do return. So, one example of this, I've been working very closely with my HR team. And the HR team have been saying that a lot of people there are some businesses out there that are using the whole crisis as an excuse to get rid of certain staff. Not very nice, not the way that I choose to do business, or I'm sure most of you would, but there are some people that have used this as an opportunity to get rid of certain staff. What they don't realise, and what they're neglecting to realise, is that in the future, when this does settle down, they are still bound by employment law, they're still bound by contractual law, and the way that they are dealing with some of these circumstances contravenes basic employment law. So I wouldn't be surprised if some of those people who have made rash decisions and haven't thought things through and haven't followed procedures properly are going to end up with some issues in the future. So if you are making changes, make sure you do it properly, take some advice, speak to the right people that can give you the advice on how to put the process in place and deal with it properly, because you don't want to leave yourself with a huge crisis in the future. The other area to focus on at the moment is forecasting. Look at your business. Take this time. We're at home at the moment. We're all having to think of ways to keep things going and looking at our business. And if there's not a huge amount of opportunity working with existing customers and clients, it's time to start writing that business plan. Think about what you could do with your business. Think about the opportunities that are going to come from this period in time, because with change comes opportunity. And as we get out the other side of this, there will be opportunities. We've seen certain opportunities for certain businesses at the moment that are being very, very successful. But all of you will have opportunities within your business to take advantage of opportunities as they present themselves on the other side. So now's the time to think about planning, about forecasting, thinking about how you could potentially pivot your business and offer services in a different way, or offer services that people and businesses may need when we come out of the crisis. So put those plans together, start doing the forecast, start writing the business plans, and also start looking about how you can automate some of the processes. I think looking at areas such as finance, look at the cloud-based platforms, look at expense automation, look at invoice automation, look at areas within your business that you can streamline so that when you come out the other side, you're set up ready with processes in place that will really, really support the business as the business moves forward. One more health warning. The government have been talking about you being able to take mortgage holidays on your personal mortgage and also loan holidays with the banks. One thing that I haven't heard the detail on, and one thing I've been trying to get an answer on, is what this will mean for people's corporate and personal credit ratings. Because if you were to take a 3-month holiday on your mortgage and not pay it, we need to make sure that that is not going to have a negative impact on your credit rating in the future and affect you for time to come. So watch out for the detail on that, and just make sure that if you are negotiating, I have recommended earlier on that you talk to the banks, if you are taking advantage of that, it's not going to affect your personal or corporate credit rating for the business in the future. And in addition, if you start looking at loans and taking loans into the business, they've got to be paid back. And if you need to take some more working capital for expansion or to grow your business in the future, you might be restricting the amount you can borrow. So you need to think about those things before you take them on. That's kind of my whistle-stop tour of what the governments are doing and what businesses should be thinking about. And I think there's a few questions now that we've got in the on the side there. So the first question I've got is, would we suggest to our clients to diversify what service goods they offer in order to adjust to the current scenario or ride it out? Well, to be honest, that's a great question. And it's something that I'd advise my clients to be thinking about at all times, not just in a current scenario. I think you've constantly got to be looking at how your business can evolve. Have a look at what you can do with your company. Have a look at what your skill set is, what you're able to offer. You know, we've seen McLaren and Rolls-Royce and Dyson producing ventilators. Let's think about what skills you've got within your business and what you can offer. And actually, while we're in a period where your core product and your core offering might not be appropriate, think about where you can generate other revenue and use the skills of your team to generate other revenue. I had a great conversation with a recruitment business yesterday who are thinking of very creative ways of using their temporary database. So they've got a temporary database of a huge number of potential candidates who are all, at the moment, no one's really speaking to recruitment agents. And they're thinking about how they can pivot the business and use that database effectively for other customers and other opportunities. So absolutely, sit there while you're there, think about your business, think about your skill set, write out a business plan so you can see what the strengths of your business are, what the weaknesses are, what the opportunities are in the current marketplace, and how you can take those strengths within your business and take it forward and offer new products and services. Because they're the businesses that pivot, the businesses that change their focus and also are flexible at the moment are the ones that are going to succeed. And actually, our SMEs and small businesses are the ones that are best placed to be able to do that, because you've got the flexibility to be able to make changes very quickly and implement them. So it's a good question, but definitely something worth looking at. Next question. If I'm not looking at rehiring certain employees, am I allowed to put them on furlough, or what would you suggest? Well, the whole job retention scheme at the moment was brought in by the government to stop businesses firing and getting rid of staff at the present time, because they wanted to try and save jobs. Hence the name, the clues in the net, it's a job retention scheme. So they want people to keep their jobs. So if you have an opportunity that out the other side you're going to need those staff, the best thing to do is going to be to furlough them, because when you get out the other side, you are still going to need to trade. You're still going to want to have a team. And actually, the people that I've been talking to over the last few days, as one business I was speaking to this morning that has built their team from 5 to 25 over the last 2 years. And he was really excited about the team he had at the first quarter this year. He got the team right. He had to get to where he wanted to be. And he's now had to furlough 15 of his staff. He's furloughed 15 of them because they're the team he wants to keep. And he wants to basically try and make sure that when this comes back, he's able to get that team back up to speed and hit the ground running. So when you're making any decisions, it's a commercial decision about, are these people vital to my business? Do I want to keep them in the future? And if I do want to keep them, let's furlough them and keep them employed, so that when we come out, you've still got a team when you get out the other side. Next question is, what would you suggest for a business who are unable to apply or likely to be rejected for the business interruption loan scheme? So the business interruption loan scheme, I've been doing an awful lot of work on this over the last 10 days, and it's proving quite difficult. But the banks are moving their position and the lenders are moving their position daily and changing their position on what they're going to lend and what they won't. I think the reality is, if you can look at your business, you have to do a cash flow forecast for your business. You've got to look at what it looks like now, what it looks like over the next few months if you weren't to have any income. Do a worst case scenario. Now, years ago when I was forecasting for business, I used to talk about forecasting a cash flow for the Armageddon scenario. And I never thought the Armageddon scenario would ever come, but it has for many businesses. So the first part is to do a cash flow, look at what you need to survive, forecast on the basis you're not going to have any income for the next few months, and then forecast what it would look like if it starts coming back. You've got to have a look at what you think the business needs and what cash you need. And then once you've done that, you can still approach the bank for traditional overdrafts. You can approach people like Market Finance, who are doing great work in helping fund receivables if there are, and they're doing work on funding. I mean, I can bring in Market Finance here if they want to add anything to that.
Yeah, Sam here speaking. So in regards to the CBIL skill scheme, so we are backed by the British Business Bank on our invoice finance product anyway. And 20% of our invoice finance book is currently funded by them. So at the moment, they only have 40 on their panel. Market Finance as a business has applied for the CBIL scheme to be able to fund further invoices and further loans on our platform. We passed this initial stage, but obviously the government's been inundated at this moment in time. So we're still waiting to hear back. We passed their first stage on Friday of last week. So we should find out in the next 2 to 3 weeks. So fingers crossed, and probably watch this space, really.
Thanks, Sam. I think, look, the reality is it's a moving target. It's changing every day, and what people are able to access and what the banks are doing is changing on a regular basis. I think the last question I've got here in front of me is which banks are offering the best bank loans with no directors, personal security, etc. It's really interesting because there was one bank I spoke to this morning. Had a rather heated discussion with them about their lending policy, and they are not offering the interruption loan scheme for overdrafts, whereas some of the other banks are. Some of the banks came out very, very quickly and said that they will not require personal guarantees up to 100,000. Then they moved that up to 250,000, and then some of them are still requesting personal guarantees. There's two challenges with this scheme at the moment, and it is quite frustrating because you have to be able to prove that you're a sustainable business. And the heated conversation I had this morning was when the bank said to me, well, you can't show profitability over the next few months. And I said to that bank, I said, well, how can any business forecast with relative certainty or any certainty at the moment that they could be profitable or what revenue is going to come in for their business at the moment? And they couldn't really answer it. So I think the key to approaching the banks or the key to finding out what's available is to speak to your existing bank because they're going to be the first point of contact. They've got a history with you. Speak to other lenders like Market Finance who will be able to help with other areas as well. But also look at which banks are offering other areas, so other products. The key issue you're going to have, though, is, and I've had this from a number of banks, is that they are prioritising their existing customers, as you'd expect, and supporting their existing customers with existing relationships. So the ability to change banks at the moment and go somewhere else who might have the most appropriate form of finance for you at the moment is going to be a bit of a challenge. So A, you've got to get through the lending criteria. B, you've got to be with the right institution that will give you the right sort of lending without the right sort of PGs. And C, if you wanted to change, it's going to be difficult because you're going to be at the back of the queue behind their existing lenders. So I think that the key is keep watching the press, keep looking at the government website, and keep talking and coming on webinars like this and speaking to people like Market Finance and your advisors to find out what's available and where you can go with it. So I think that's my allotted time. What I'd just like to finish with is basically, to sum up, is if you can not panic, that is the key. Try not to make knee-jerk decisions. If you are making decisions, try and make them based on facts, information, and sound information that you've prepared within your business. But also look at this time as an opportunity to think about what you can do with your business, where you can take it forward, how you can pivot, and are there other areas that the skills you've amassed within your business can offer those sorts of services to other companies at this time.
Great, thank you, Bobby. I've seen that there's one more question from Catherine. So, Bobby, an extra 5 minutes to answer that. If not, we can kind of take that offline. It's just in the chat question. Okay, so the question is, we're banking with a certain bank, I don't know if I'm allowed to name them, and they're not offering the loans at the moment, they're only offering overdrafts. I think, as I said, it's very, very important to have that conversation with your bank, have a dialogue with your bank manager, and the most important thing of all is to have all the information available, because I think one of the banks I spoke to had 30,000 applications, I think, on the first day of, it was either all the banks or one of them, but they had 30,000 applications in the first day. And what you've got to be is prepared. And when I was helping clients raise finance under the EFG scheme many years ago, one of the keys was preparation. If you go to a bank and say, well, can you lend me some money, or the bank are going to ask you, what do you need? What do you need it for? How are you going to spend it? You need to be prepared when you go to the bank. So the key before you go to any of the banks is to have your information together. If you've been trading for long enough, get your last 3 years sets of accounts together, get your latest management accounts together, get your cash flow, immediate cash flow for the next 3 or 6 months, put a forecast together that shows that the business is sustainable after the crisis, and show that your business will be sustainable, and have a very clear idea on how much you want, what you're going to need it for, and what it's going to be spent on. And they'll also want statements of assets, liabilities, income and expenditure. They need that anyway because they have to tick a box as to whether they could have given security or not.
So get all your information together, have everything ready, get it for have a conversation with your bank in the first instance and see what they can do. Whether this bank is currently only offering overdrafts, I do believe that the bank that you're talking about is within the lending scheme and will be offering a broader service offering very soon. Keep talking to them, but get the information together, because if you can't get what you need from your bank, although you will be behind the existing clients, it's worth talking to other banks. And if you have the information, you've got it all together and you can send it over to them, you're going to have a much better chance of getting them to look at your application and giving you a quick yes or no whether they can help you. So get your information together, speak to your existing bank first of all, watch what happens on a daily basis, because they'll be making announcements about what they can and can't do. And then if that doesn't work, start speaking to the other banks with the information pack ready to send off.
So much, Bobby. And as we mentioned at the beginning of the session, we will be sending around the recording along with Bobby's details. So if you want to get in touch with him directly, feel free to. And if you have any questions directly for Market Finance, just feel free to reply to the email and we'll get back to you as soon as possible. Thank you all again and have a lovely day.
Thanks,
Thank you so much.